Welcome to the Titans of Industry weekly interview. This is definitely where you want to be if you're looking to create wealth habits and understand exactly what works in today's world. On top of that, I would say that our guests are far from mainstream. If you want facts that matter and that will inspire you to make changes in your life immediately, our guests will pull no punches. Last week we had Rick Rule discussing what he terms as the greatest opportunity in the world today, Jim Rogers with his unique take on Asia, and Andy Hoffman on precious metals. Today I'm thrilled to be speaking with Luis Cammarosano, who operates Smaul Gold channel and website, and I will tell you what, Luis is one of those people you want on your team. He's thorough, he's meticulous. I love people who constantly report on stuff that flies under the radar of everyone else. Luis, how are you, sir?
I'm doing grand, Leo. How are you?
Good. I want to jump right into this and ask you this. The Fed interest rates policies, they're now so openly talking about raising rates in advance. Why are they so open about it? They used to be so secretive about the next policy decision. It seems like they want to create this sort of anticipation towards it almost.
They want, actually, I think they are trying to help control the dollar because all of their policies have to be based on where the dollar is. If they want to do more QE, the dollar has to be higher.
Interesting.
But the reason the dollar is higher over the last year and a half is because they ended QE, so they tried to look like they were prudent, even though they printed $4.5 trillion. I want people to forget that. And they say, well, look, we're going to raise rates. So everybody anticipates that they're going to raise rates. In the meantime, Bank of Japan goes negative, ECB, European Central Bank, goes negative, ECB does QE. So now it looks like the United States is the prudent bank. It has no QE program going. It's actually going to raise rates. So the dollar index rises. And the dollar index now there is higher than it was when they started QE, when it should be lower because they just blew $4.5 trillion. So they do what I call these yak attacks, where they're out there constantly saying, we're going to raise rates, we're going to raise rates. Next month is a live meeting. And they get everybody excited. The problem they're having now is these open mouth operations are starting to lose their effect because each successive meeting that comes and goes without a rate hike, people start thinking, okay, they're just talking. So the reason they've been talking and being so vociferous about raising rates is that's part of the game. They want people to believe they're going to raise rates and they're going to keep the dollar high and they're going to create an interest in treasury bonds. Because if you think about it, treasury bonds are one of the few sovereign entities that pay interest. So if you want to keep the dollar strong, people need to be interested in holding treasuries. Well, if they pay interest and the other countries don't pay interest, well, that's a good thing. And the fact that the Fed keeps saying they're going to raise interest rates makes it look like they're some kind of prudent steward of the dollar. But so far, really, they haven't been. What they've done over the last 10 years is raise rates once, kept them close to zero, and printed $4.5 trillion. But they've managed to get so much mileage out of those yak attacks.
Interesting. It almost seems like they have these organized think tanks and publicity consultants that build this story behind what they really want to achieve, but there's really no basis to it. That's fiat money for you. You can never base any decision on fiat money. That's Luis, let's talk about the Swiss bank here. This is the most outrageous news I've seen in 2016, maybe in the last 5-6 years. Also the Norwegian bank as well. They are openly buying equities, which is what the Bank of Japan has done for a while now. But they are buying mining stocks. These are central bankers, the world's predominant fiat money supporters, going in and openly printing currency, and then on the flip side, buying mining stocks. Now, I know, and you know, once a central bank starts a policy, other nations usually follow. Where do you see this trend going?
Okay, so the Swiss National Bank, this isn't new to them buying equities. They've been at it for about 6, 7, 8, maybe even 10 years. But of course, they've been upping their amount of shares that they've been buying. And what's interesting is the Swiss National Bank hasn't bought gold for years. And in fact, you may recall a year or two ago, they had the Save Our Swiss Gold, where the people had a popular vote and tried to make the Swiss government agree never to sell, the Swiss National Bank never to sell gold again, and to repatriate their gold and to keep a certain percentage of the reserves in gold. And
they were opposed. They
were totally opposed to that.
They decided that kind of policy would restrain, which they use in a negative context, it would restrain their ability to print. So basically, they told the people, look, gold would be bad because we will have a sound economic system, which is as double talk as it gets. But please go on.
No, you're absolutely right. So instead what they did was they figure they can buy equities. And they don't just own equities like AT&T and dividend-paying stocks. The fact that they own equities in the first place is ridiculous. But they don't just own those. They own things like LinkedIn and Zillow, companies that don't even make any money. And what was interesting to me was I had seen this story. A lot of people had seen this story. It was on Zero Hedge. It's in the mainstream media. And I was saying to myself, well, they own $63 billion in U.S. stock. I wonder if they own mining shares. And I thought, nah. So I went onto the SEC website. I did a search. I was stunned. They own 25 different, at the time, as of the end of the second quarter of 2016, they own 25 different mining stocks, maybe 30 different mining stocks. And I calculated the price at the time that I found these shares in sometime in August. And it came out to like $1 billion worth of mining shares. Now, as we just talked about, they're trashing gold, but they got no trouble buying mining shares. So then I said to myself, well, what other central banks might be doing this? I searched there. I typed in a lot of the different names. I knew Bank of Japan. Bank of Japan doesn't seem to have any U.S. equities. They're too busy printing yen and buying up all of the Nikkei with their money. But the Norwegian Central Bank owns shares. Now, that's on behalf of the Sovereign Wealth Fund. Now, I don't know if they're also printing money and buying shares, or they're just using the Sovereign Wealth Fund oil money to buy shares. But still, they own a substantial portfolio in mining shares, as well as a substantial just general equity shares. And they're talking about now wanting to increase that. So your first question is, what happens now when the ECB has just started talking about, well, maybe they should also buy equities? Janet Yellen hinted on Friday in her speech at Jackson Hole that the United States should consider, if there's a next recession, not saying there's one coming because they're going to raise rates, they should have a $2 trillion QE where they should think about broadening the assets that they might buy. Well, what assets could those be? Stock, of course, equities. Now, the problem is, as you say, if central banks get involved in printing money and buying companies, well, at some point, Leo, aren't they going to start to own significant portions of companies where they can start to exercise control over this company, picking directors, directing the policies of the companies, when to declare dividends, what the policies of the company should be vis-a-vis working with the government. And that's where I think the real danger is. It's not just taking away the market, it's just putting so much control. And that's why I kind of cringe when I hear people say central banks are losing control. No, they're not. They're exercising more control, and no one is stopping them. They're working with the governments, the central banks, and the media to create what they want in these markets. I saw a headline today in Bloomberg: central banks expected to save the world. And then it said, and make money for governments. And that's my point all along. That's exactly what they're doing. They're propping up the economy through the stock market and owning greater portions of the stock market and controlling greater portions of the market and therefore the economy.
Now, let me just understand this. The Swiss National Bank and the Norwegian National Bank, they're not the same as the Fed, with the fact that they're actually owned by the government. Is that correct?
Yeah, so there's an added distinction with the Norwegian National Bank is that they're acting as kind of the trustee for the Sovereign Wealth Fund, whereas the Swiss National Bank is actually the wealth fund itself. And then the Fed is supposedly a private entity that is granted its charter by the federal government and exists at its pleasure and is a private bank. So there is a distinction there. But that doesn't mean that the Fed can't engage in similar equity buying. And in fact, she mentioned in her speech some of the things that she was suggesting future policymakers might do might need legislation. So, of course, what happens is if we have a collapse or a crash, they use that to gain more control. And that's when the Fed can come back to Congress and say, the world is collapsing, the world is ending, we have a stock market crash, but we... So that's where I differ from just about all the other analysts where they say they're losing control. I'm saying if you look back to 2008, they've gained enormous control to the point where QE is just some kind of passé thing that everyone does. That's what banks do. And now they're looking at how do they expand QE. That is an outrageous amount of control to think they can buy corporate bonds, sovereign bonds, equities, whatever they want.
It's very unique. I don't believe that in 20, 30 years when people look back at this era, they will be absolutely shocked by what happened and how it came to be. Louis, I want to switch gears here. I want to ask you about your take on China. It just looks like every day this country is preparing more and more to replace the U.S. as the dominant power in the world. How close do you think they are, and what specifically are they doing to make the global forces believe that they are ready to become the reserve currency of the world?
A lot of things that they're doing is setting up these yuan clearing hubs, which basically most countries in the world now have. They're increasing their gold reserves as a percentage of their reserves. So now they have 1,828 tons of gold in the People's Bank of China. A lot of people say, China has more. I don't believe that. I don't believe that. It's the People's Bank of China. That's just their central bank. Of course, there's other gold in China. And of course, the government owns all of it because it's a communist country. But just sticking with the People's Bank of China, because that's the official policy-making arm of China, they have 1,828 tons of gold. It's only 2% of their overall reserves. A good portion of their foreign reserves are in U.S. Treasuries. I think they have 1.4 trillion. Now they've kind of moved that down, to about 1.2 trillion, but they still have a lot. So China is basically just growing its industrial base, it's growing its use of yuan in local transactions, regional transactions. I think it's the sixth most used currency now in international transactions. And again, they're in no hurry. There's no need for them to do anything drastic because they still have value in those $1.4 trillion worth of treasuries. They don't want to do anything to upend the dollar and basically bite their nose to spite their face. And the yuan yet isn't ready. So I think they'll continue to build gold. They'll continue to do regional alliances. They're cozying up to Russia, cozying up to Saudi Arabia. They have a tenuous relationship with the U.S. It's still probably the largest market for exports. So I think China will just keep doing what they're doing. And if China truly is the dominant economic power and it doesn't collapse because of its own reckless monetary policies, then over time, 20, 30 years, it'll just naturally evolve into the more powerful country. But I don't think they're going to do anything next week or next year. There's going to be some announcement. I think that's what a lot of people are saying, and I don't believe that. I don't think that's how it doesn't benefit China to do anything like that because they still have their feet in the International Monetary Fund with the SDR. So they're playing on both. They're creating their own systems, but they're also getting themselves well positioned in the current system. So they're going to have a seat at the table no matter what.
I definitely agree with you. They don't want to rock the boat. They want to just make sure that they own the boat someday.
Exactly.
Louis, here's what I want to ask you. You do a lot of research and you put in a lot of hours on making incredible insights. What is your research telling you about the risk of high inflation rates in the U.S.? We've seen low inflation rates for years now, even deflation in some of the commodities, and it looks like the private sector is closing down debt levels. That's what's creating this deflation. But to counteract that, the U.S. government with the Fed is creating more and more base money, meaning government money that goes into private contractors, then trickles into the economy. Where do you see this colliding and becoming just a huge inflationary disaster?
It could take a while. I would have thought it'd taken longer, but the reason we haven't had the dramatic inflation other than in assets and things where government actually has a hand in it, like health insurance, is because we should have had a massive deflationary depression when that credit bubble burst in 2008. That wiped everything out, but instead what they did was they reflated the credit, and so they've created this artificial environment where the demand is artificial, so they're not really pushing inflation naturally by base money. They're trying to push it in certain areas, and they have managed to create massive amounts of inflation in housing and in the stock market.
Interesting.
Because if you think about it, you can't put money anymore in a bank account and get enough money to live off of. You need to have like $10-20 million to even think about getting a livable amount out of that. It used to be a much lower amount. So they've created that inflation in the stock market and the assets, but they haven't created it in the real economy because that money isn't flowing around because people are broke. So they reflated the assets, but the people didn't. They have people who create the velocity of money every day. They're not transacting other than with the additional credit that they may have gotten.
That's a great way to put it.
We're not getting that acceleration.
You know what? We're actually seeing very low velocity of money charts coming in from the Fed, which suggests to me that your research is dead on. I want to pose another question to you. This is something that's interesting to me personally. So in 1971, 15th of August, you got Nixon pulling us off the gold standard, basically making all the world's currencies float with each other, but having no reserve. No country has put its currency back on any reserve to a great extent. Where do you see this ending? How do you see the end game of this currency system? Obviously, this is just a credit system, and once countries become, not credit worthy, then the system will collapse and we'll have a catastrophe. But how do you see that happening?
Well, I actually perhaps think it might not happen because they all have a vested interest in keeping it going and creating more credit. And there's always, as you hear, and if you read into what Janet Yellen is saying, we need to buy more assets, which means they need to create more currency to buy more stuff that doesn't really need to be bought. In other words, there's no need to create demand for more stock for stocks. If the market doesn't want to buy them, they're saying, oh, there's no demand, or we'll buy them. And when you have a fiat currency system, which is the whole system, all the countries, if you think about each central bank, they have no let's go back to the Swiss National Bank. What did they say? Oh, no, we don't want that. We don't want any kind of restraint. So why would any central bank, from China to the United States, any of them, they love this fiat system because it gives them power. Because they don't want to restrain themselves. They realize that restraining themselves, the first one who restrains themselves is going to get their clock cleaned. Because everyone else can outprint them. And so that's why I don't know how it's going to end, and I don't necessarily see it collapse. I just see a greater concentration of power into the banks that will call upon themselves to have the ability to print currency, and not just print it, but direct it to where they want it to go. And as long as they have the lawful ability to do that, I always say rigged systems don't collapse. Their operators don't lose control unless they're removed from running it. You don't beat the casino at the casino unless the casino burns down. And that's why, even if it collapses, what do you think is going to happen? Everyone's like, oh, they'll do the SDR. Who's they? It's the same people that collapsed the system will just reallocate the pieces to themselves again.
Interesting. Louis, your insights are incredibly provocative and interesting. If people want to know more about Small Gold, where do you think, should they go?
I think the first place you should go is the smallgold.com website. And then from there, you can check out Small Gold on Twitter, Small Gold on YouTube, Google+. But the hub is basically smallgold.com, SMEULGLD.com. Please check it out.
Perfect. Louis, it was a real pleasure to have you on. It's exciting to hear your passion for helping people and sharing knowledge, and we'll definitely have you back. Thanks.
Thank you very much, Lou. Thank you.
If you've never heard of Luis Cammarosano, it's because he's a rising star in the gold community, and I'm thrilled you had a chance to tune in today. We kicked off the interview by asking Luis of Smaul Gold about the Fed interest rate policies and the fact that they are open about them in advance, in complete contrast to previous years when they were secretive about it. Luis brought a fresh point of view and said it's done on purpose in order to control the dollar index by maintaining the illusion of sound thinking and well thought out meetings. These bankers hope investors trust in the Fed and they can keep printing without losing too much purchasing power for the dollar. This sort of blunt manipulation is nothing new to us, and at Wealth Research Group we literally just published a special report about how to protect your portfolio and attack back the banking manipulators by owning mining stocks. The report is called Central Banks the Endgame, and the link is right below. Secondly, if you haven't heard about this story, it's because it's part of the manipulation, but Zero Hedge has already picked it up among other major sites for the astute. We released a mini documentary called Jumping Ship, Central Banks Loading Up on Gold and Silver Stocks. Watch it on our channel, but Luis is actually one of the first to alert investors about the Swiss and Norwegian central banks buying up $1 billion worth of mining stocks. I know it's insane. Watch the mini documentary, go to Smaul Gold, see this. It's amazing. Luis raised an interesting point about the Central Bank of Switzerland refusing to increase physical gold reserves a couple of years ago, but on the flip side, buying the shares. We at Wealth Research Group, we believe that this is an opportunity. Their actions present us with an opportunity because the portfolio of 25 stocks that these banks bought are now full of cash, and they have begun an active search for potential takeover candidates. The small mining companies that receive offers from the big ones will go up hundreds of percent. We've seen it many times before. This phenomenon has occurred in the last bull market, and it's going to appear at this one. I encourage you to learn how to spot potential buyout targets with our special report titled Targeted Buyouts, the Next Wave of Gold Riches. Do read it. It will bring a huge boost to your portfolio. It's also down in our link section below. Regarding China, Luis says that geopolitical forces are slow to change, and it will still take a long time before China can be considered the dominant force in the world. This slow change politically is very beneficial for commodities investors, as it means many more years of middle-class growth in China, which leads to increased demand for commodities. If you want to wrap your head around just how big the commodity opportunity really is, read 21st Century China, Monster of Commodities, our detailed wealth summary to get an idea. Regarding the risk of hyperinflation in the US, Luis was very decisive about the fact that it was actually deflation that started in 2008, but really never played itself out because of the bailout programs reinflating the bad debts. Therefore, the situation today is really complicated with many unknowns. At Wealth Research Group, we believe that everyone should think about defense first, not losing money, and offense second, making money. If you're concerned, as you should be, as we are, educate yourself about crisis defenses with Uncharted Waters, the report we published about central banking and how to prepare from its flawed setup. If you are ready for offense as well, our take is that specific companies in the mining arena will go absolutely parabolic in the next few years. This is our main focus and expertise with our free 365 wealth letter. Be sure to read Steroid Stocks, Digging for Profits, the report we published on these mining stocks. These shows and our business are driven by our passion to educate, prepare, and improve your financial fortress daily. Keep tuning in as we're interviewing titans of industry every week, and one wealth nugget or one sentence they say can make a world of difference to us all. Thanks for watching.